Does the market right now favor buyers, sellers, or no one at all? Now let's zoom out to the big picture. After several years of volatility, Vancouver's housing market is slowly moving towards something we haven't seen in a while: balance. Activity cooled through 2024 and 2025, inventory built up, and price growth slowed. Heading into 2026, the market feels more measured and more rational. Mortgage rates are no longer rising aggressively. While they're not back to the ultra-low levels of the past, they've stabilized enough that buyers can actually plan again. Psychologically, that matters. For many people, stability alone is enough to re-enter the conversation. At the same time, home prices in Greater Vancouver are no longer surging. Instead of double-digit growth, we're seeing modest declines or flat pricing, depending on the property type and neighborhood. Detached homes have softened more than condos, and some segments are still adjusting, but this is not a collapse. It's a cooling. And this is where Vancouver is different from many other markets. Vancouver didn't experience the same as explosive overpricing that some other cities did during the pandemic. Prices here have always been high, supported by long-term demand, limited land, and global appeal. Because of that, the correction we're seeing is slower and more controlled. In many established neighborhoods, prices are holding relatively steady. Demand hasn't disappeared. It's just more selective. Buyers are cautious, but they're still active. Sellers are realistic, but they're not desperate. That's what balance looks like. Now let's talk about affordability, because this is where the reset really shows up. Vancouver is still one of the least affordable cities in Canada. That hasn't magically changed. But affordability in 2026 is improving at the margins. Slightly lower prices, more inventory to choose from, and stable rates mean the math is starting to work again for some buyers. Especially for first-time buyers and move-up buyers, the conversation has shifted from "this is impossible" to "this might be doable." Not everywhere, and not for every budget, but enough to bring people back into the market. On the seller side, there's a lot of confusion. Even with slower demand, most homeowners in Vancouver are sitting on significant equity. Many don't need to sell, and many are locked into low mortgage rates from previous years. That means we're not heading toward widespread distress selling or forced price drops. Instead, sellers are choosing when to list based on life decisions, not pressure. That's why inventory has improved, but hasn't flooded the market. And that's also why pricing strategy matters more than ever. Homes that are priced correctly and prepared properly are still selling. Homes that chase yesterday's peak prices tend to sit. This reset isn't just financial, it's behavioral. Buyers are prioritizing function over size. Flexible layouts, basement suites, and multi-generational living options are getting more attention. People are thinking about how they actually live day to day, not just square footage. At the same time, the rental market is tightening again. Rents are expected to rise modestly, and for some renters, the gap between renting and owning isn't as wide as it used to be. That's pushing certain renters to reconsider buying. Another growing trend is what I call the stay and improve mindset. Many homeowners aren't moving, they're renovating. Instead of upsizing, they're adding functional space, secondary suites, or home offices. In Vancouver, that often makes more sense than trying to buy a bigger home at today's prices. There's also a longer-term factor that doesn't get talked about enough: location stability. While other parts of the world deal with climate risk, insurance issues, and extreme weather, Vancouver continues to be seen as a relatively stable long-term place to live and invest. It's not without challenges, but it doesn't face the same pressure points as many other regions. That stability is one reason Vancouver is likely to remain quietly competitive as this reset continues. So what does all of this mean if you're thinking about making a move in 2026? It means timing the market matters less than understanding it. The buyers doing well are prepared, patient, and clear on their numbers. The sellers succeeding are realistic, strategic, and focused on positioning rather than headlines. This isn't a market for extremes. It's a market for clarity. And if you're wondering whether 2026 is the right year for you to buy or sell, that's actually the right question to ask. In a reset market, the best move is the one that fits your life, not the one chasing momentum. So let me ask you, what are you most curious about heading into 2026? Prices, rates, timing, or whether waiting still makes sense?